Vega. We cool.
Pickleonia.
Oh, is it over? Okay. Hey, what's up? Good morning, guys. Holy shit, that thing's so long. It's been like a year since I've played it. I forgot how ridiculous it was. Good morning, Jen. How's everyone's weekend been? I know everyone's just had a great weekend after you totally all got stopped out on your puts when we broke above 48.05. And then everyone went long calls all the way up to 48.50. Right? We not talk about our pets. My sports ball team won. Congratulations to them. I broke up with my girlfriend, but I had so many calls, it didn't matter. Amazing. I broke even on Friday. Actually, not bad. Yeah. Rip puts. Yeah, yeah. That was a hell of a push. We'll talk more about the structure of that later. Um how it formed, when it formed. The first rule of Put Club is talk about your puts a lot. I thought the first rule of Put Club was to be more bullish than the bulls. So far, so good. I haven't traded in weeks. I'm just sitting on my Oxy, Fubo, and Express. Okay, fair enough. All right, so let's see where we want to get started today, because we got a lot to go through, and I don't want to have another 4-hour stream. Um, how bullish do you think the bulls are after that push up? I mean, I don't know. And just talking about looking at sentiment broadly. I've seen it kind of mixed. A lot of them are really happy that their 4800s finally went in the money the day they were all going to expire. But I would say they're still very like reserved, right? Like no one really trusts the upside. And no one trusts like continuations in the upside, and that's been pretty pervasive since like towards the end of December, right? Is that no one really feels like this should go higher, and that feeling I think goes across the Bulls and the Bears. I would say that this might lift sentiment a bit in the sense that they feel like there's another price target at 4,900 that's a lot more, like a lot closer and more attainable. But I don't really think that feeling of caution has faded. A lot of the news articles over the weekend are kind of like, oh, S&P rallies higher, tech rallies higher on the back of potential for Fed rate cuts. But that's weird because all the data last week was pretty negative in terms of seeing the Fed move into rate cuts in the early half of this year. All of the Fed speakers were pretty vehemently against any rate cuts in the first half of this year. So I don't really think that was it. I mean, I think positionally there was a lot of calls out of the money. Um, I think those got wrecked in the early half of the week with the macro data, and I think there was a small opportunity to push higher, and we did. And I think when we broke that higher level, everything after that was just exuberance, right? Like there really wasn't a ton of positioning going into like the morning of going into the morning session on Friday. We had positioning on the chain 4800 through like 4815. You can go back and look. There's a bunch of screenshots, but this is pretty much where all the positioning was. There was a lot of it. These have been building for a month. They've stayed out of the money the entire time. They were mostly, dead calls, right? And as we moved up into that range, after that 40, like we got a bounce at like 47.99, and this is really where the day turned. We started to move up into that range, and as soon as we broke that all-time high at like 48.18, I think it was 48.18.62 if I'm not mistaken, we just got a flood of zero DTE calls. I will say that a lot of them didn't stay on the chain. A lot of them didn't kind of like hang out. Most of the push was zero DTEs, and inevitably that found some future sellers to the upside at around 48.40, which really wasn't that. The difference between those two strikes really isn't that big of a move, right? It was about 50 basis points or something. And then, once we found those future sellers, that was kind of it for the day, right? We didn't ever move higher again. Um, I don't really think like supportive positioning is very great here. You know, we got some interest at like 4,800 and stuff, but um we'll see. I mean, there'll be more positioning that comes in, you know, once futures open and we kind of see the direction that's taking, and we'll see more going into market open on Monday. We don't have a lot of data this week, but I believe we do have PCE coming this Friday, and that's going to be an important data point. So I also think we have Bank of Japan's interest rate decision, Monday or Tuesday. I'll double check before the end of this. I don't have any recommendations for a miniature chainsaw. Please play it's built on a foundation of sand, wet sand. Yeah, but I mean, you can get supportive positioning even if it's built on nothing, right? The price did hold into close. So, um, did you look into the VIX spikes? I mean, generally, what happens is you're usually seeing like the auction window reveal like a brief period where there's a spike in the bid, or the spreads widen out. And remember that like VIX looks, I think it's like every like 15 or 30 seconds, and then you know if there's you know a gap up or something like that, or you know demand at that point in time, you get a spike, right? It doesn't really say anything about where VIX is going to be in the future, right? It's just kind of a signal that there's some demand on VIX, and the auction window kind of reveals it, right? Oh, and when the fuck will Express have an options chain? Did I miss it? Nope. It's still just non-existent. I have bad news, and I'm sorry you have to find out this way. You are the father. I don't know what you mean, Carl. Did you get rid of Dillionaire? I'm trying to upgrade, and there's no option. I don't think I did. No. Saw a Twitter account showed straight algo one quantity call buys starting around noon nonstop. Yeah, it was pretty much. I mean, there was a point at which we broke the all time high, and I kind of told everyone, I was like, yeah, this isn't stopping, and you know, like call delta from that point in time just kind of went parabolic, right? And like whenever this starts happening, you just don't run out of call buying until future sellers come in and you know kill all the momentum. And that's kind of what happened, right? Is eventually we did find out where the limit was for those you know probably long CTAs back at like 47.50. They're just taking profit at that point, right? But ultimately not a lot of in the money profit taking. We didn't get any kind of serious reversals. You know, it was a bull run. It's a breakout in a bull run. At that point, you just go long and see where it takes you. I'm hearing valuations don't matter now, and the market will rise with QE as the Fed lowers interest rates to save banks and our economy. Can you say go bulls? So I don't think the Fed's going to lower interest rates this year. Not a lot. If we see any rate cuts, it'll be maybe one or two. I kind of don't even really see a path to two. Here's the problem. And you know, try to avoid talking about the macro stuff in the early part, but I'll throw this one out there. The Fed has two goals, right? You have price stability and maximum unemployment. Now, they have focused solely on achieving maximum unemployment They've done very little to achieve price stability. So as far as their dual mandate goes, they've failed so far. As long as the labor market continues to remain strong, it will continue to present a threat of future inflation spikes. Right now, wages are up over the last 2 years. Obviously, they're still very much under trend, at least compared to inflation. But um, we are going to see, wages probably remain in ahead of prices for some time until we see that labor market pull back, and until we do, consumer demand can still keep inflation red hot, right? And so if the Fed cuts rates, they open themselves up to the potential for making the same mistake Volcker did back in the 80s, right, where he paused rates and then inflation skyrocketed. And right now we're in the middle of and I know it's not getting a ton of news coverage yet, but we're definitely in the middle of what is a very, very large supply shock with shipping through the Red Sea. We have, 15% of the world's container and dry bulk traffic being diverted on a route that's 17 to 22 days longer, right? So and obviously that's going to increase shipping costs dramatically because you're using almost twice the amount of fuel that you would, like you would normally, especially on like the Shanghai to Rotterdam route, and oil into Europe and into the East Coast US. How on earth do I build capital with $1,000? It's tough. I mean, I would say that the vast majority of accounts at like $1,000 are probably destined to fail. Even $10,000 is very low to ensure like a good success rate, but it can be done. It takes very, very careful management. You have to be pretty risk averse. You probably have to scalp with pretty tight stops until you can get enough money that you can take on bigger or riskier positions, and that's definitely going to take a while to build up. But if you keep your target small and you don't take on too much risk and you keep your rate of growth steady, you can build it up. It's just takes a lot of patience. Can any one of us see futures, buyers, sellers? You could get the data, yeah. I mean, most future brokers have order book data and stuff. I mean, you can't see who they are, but you can see the sales. Futures are actually a little more transparent, right, than the equities or options markets because you can only buy or sell, right? There's not a lot of and seats like the CTFC data is uh far more granular as far as where everybody's positioned and stuff, so you can see everybody's positions. You get the COT report, right, which is obviously on a delay, but it can reveal a lot of information about kind of how everyone's structured and what everyone's expecting. I don't think it's rhetoric. I mean, there's definitely a big oil short going on right now, right? Oil should be significantly higher than where it's trading. Um, I think the oil short's been pretty obvious since we first started seeing, Britain get involved, and more of the Yemeni, like, or the Houthi Iran, joint operations. So as that becomes like a bigger and bigger threat, you would expect oil prices to skyrocket, right? But they really haven't yet, and I think yeah, that's part of the tension there. So I don't disagree with it. I mean, most of those CTA positioning reports are pretty accurate, at least at the time they're printed. So Bob Vance, I see you found Dillionaire. Welcome aboard, man. Thank you so much. Hit me up. I'll get you added after the stream if you need me to. Otherwise, you might already be in. Have any organizations been using AMD chips to donate to their local charities? If not, isn't shorting their earnings pretty compelling? I mean, I think AMD is going to see a lot of like database growth, like database sales growth. They arguably have the cheaper of the AI chips, right? And probably a little bit more inventory in them. But yeah, I don't think they're going to do the Nvidia thing and start funding startups that are financing massive amounts of their chip inventory, right? So it's probably likely that they're not going to see the revenue explosion that Nvidia did, but they may see enough. I would probably be cautious with it. How's IWM looking? Should I full port Fubo CSPs yet? Yeah, so we'll go over the memes here in a second. It looks like I'm gonna get about 30 minutes to run through everything, but I'll go through those in a second, let you know how they're looking. How's IWM looking for the next few weeks? I could cover that. Do you think it has more potential than QQQ and DIA later this year? I mean, I think IWM's still very much in a bear market, so yes, it could. Although if interest rates remain high, it won't. Also, PayPal CEO said AI, and the stock started running. I think all stocks just ran on Friday. I don't really know if him saying AI was the turning point. At this point, I need a scanner for CEOs saying AI regardless of forward guidance or debt problems. I'm sure there's a lot of people that wish Ryan Cohen would say AI. Their valuation is insane. I mean, PEs are kind of meaningless right now, right? This was days before. Oh, okay. I haven't looked at PayPal. I could take a look at it. I tend to not really care about it very much. When did their okay? So they got like a little rally. I'm guessing this is right around the time it was said. It still kind of looks like it just ran with the market into the end of the week. Um, Maybe resistance there at the gap. Probably all the shorts are in above that. I would say if it breaks that gap though, breaks above 67, that's probably a pretty good options play. Well, that's probably not even that tight of a stop either. Is short oil position big enough to see a violent move up from them closing? Probably, yeah. We'll see how that looks tonight. I know a lot of that's been escalating over the weekend. The CTAs will want to get out before oil hits 75, right? That's definitely where their risk is going to start kicking in. All right, let's look at run through the memes real quick. GME still pretty liquid. It's got It's got a lot of upside liquidity here. We haven't seen too much shorting in the ETFs yet, but we've seen a decent amount of shorting in the underlying. There's plenty more available. I think at Friday it held below DN, so we could probably expect this to continue down, barring mid caps running even more. We did get a little bit of a rally in mid caps over the last 2 days as they tried to move in and pick up some of that larger index move on the breadth side. But I don't think this is really going anywhere anytime soon. I don't think this is gonna like OPEX or anything like that. Maybe March. I'm not sure. I'm not even sure if March is too soon, but yeah, maybe around March OPEX we'll see some movement. Otherwise it looks like it's going to continue down. Upstart, Affirm, the whole like incidental fintech basket, SoFi, all of those that have that like bots exposure, Palantir, those all got a huge boost from AMD last week, AMD and Nvidia last week. With both of those running really, really hard, that's going to suck up the liquidity in that bots ETF that they like to use to short these stocks. And without sufficient liquidity, they're going to be probably forced to cover some of their shorts, especially on the ETF side. And so we did see a little breakout and a little bit of a move above delta neutral. I will say that the breakout of delta neutral here could see an additional run if Nvidia and AMD keep pushing up. I know some call interest picked up here on Friday, just a little bit, but very similar to this prior run on Nvidia and AMD. As we were coming down and we broke back through DN, retested the upside where the call interest was and then failed. Obviously that call interest is coming in primarily at 32.50, which is now in the money, and 35. So a breakout above that is possible. If Nvidia and AMD start to reverse course this week, I would say Upstart's pretty likely to continue going down, but it may trade flat for a little while before it does. Fubo found some support at 243, which is interesting because I wouldn't have expected to see that given the fact that there's still plenty of liquidity here, but we did find the support and we bounced back up through 250. There was some covering Thursday and Friday, as you can see here. We're starting to get just a little bit of covering. I think only enough in order to just keep this going, and largely in line with the bounce in Russell 2000. If Russell continues to trend down, I think we're going to see Fubo move down another leg to that 223 level. If Russell reverses here and starts moving back towards 200, or 2000 on RTY, I would expect Fubo could probably keep running. Usually breaks to the upside of 250 on Fubo lead to tests of $3, because Fubo's traded so much around the 250 mark over the last year. There's a ton of options positioning built up in this range, right? And so this upside range tends to be pretty violent, and the test of $3 usually comes pretty fast, as you can see here. Here generally as soon as we break that level, we get like pretty strong upside moves. And more recently, right? The longer we trade in that range, the more often that it becomes supportive and leads to more upside on the moves up. And then part of that is a factor of like a lot of sold calls being at 250 moving in the money, and a lot of sold puts moving out of the money. Siri kind of got a little bounce into the end of the week. It's trading back at that 550 level where it's probably going to do nothing for some time. I don't really have anything to say about that. Top did not release a statement on Friday, so I'm going to go ahead and assume that they're going to release that statement whenever They're done with their financial reporting, and they've got their the accounting side of that done. One of their main accounting firm kind of bailed on them, I think. So they're working on getting that report and the earnings report and their kind of turnaround report set up, and they're supposed to submit it before they're delisted by the NYSE. But I think shorts will continue to try to hang on as much as they can until those reports are released. However, because of the delay, they may have to cover a little. So we may not see another repeat of this. As you can see, liquidity is even more scarce through this period than it was back here. They're really drying up the available liquidity. It's getting very, very tight. And without any news on Friday, the shorts have to carry forward that synth short for an indefinite period of time. And so we may see them cover some of the shorting from these prior periods here and here. And if they do, at the $2 level, with the amount of interest at 2 and 250, we could probably see a small run up. I wouldn't say that it's going to be crazy or anything because it won't be backed by that data. But it's got some potential to break out there. Especially if it continues to get index pressure. I know it doesn't have a lot of exposure, but even that little bit of exposure it does have helps. Beyond was getting pretty wrecked into the end of the week. It seems to have mostly regained the 733 level where we were looking previously, and it bounced off of, make sure it did, but I'm pretty sure it did. Yeah, it bounced just below or just off of DN on Friday. Yeah, so, and we actually saw Gamma here move positive. Not a lot, but about 700,000 in positive gamma exposure, and Delta is just slightly negative at negative 439 million. Charm also flipped back, so a lot of the in the money puts fell off here, and a bit of the out of the money put positioning, and a lot of sold calls. So a big dump in sold calls. Also a lot of put selling. This behavior, and I really hate to say this, but it is very similar to the options positioning that we see on GME before large OPEX runs. So this week it might be a fun thing to have a little exposure there. I wouldn't say too much because I still think there's plenty of liquidity, but a little exposure to maybe an out of the money move or like some debit spreads to carry for like T+2 might not be the worst idea on that. Yeah, that one's interesting. Upstart actually kind of looks like it's got a bit of that price action going on too. So maybe the potential for a run on that's a little better than I thought. The hard floor on Beyond is now at like 616. So this line should be a little lower. And we didn't test that. This is also the first OPEX since Beyond came off of Reg Show. So yeah, there might be a little chance for a turnaround there. I don't know if it's going to be a big move or anything like that, but maybe it can move back above where those prior put walls were at $8 and $9, given that a lot of the negative gamma at those levels has fallen off. And pretends has the potential for a little bit of upside, right? Not a bad move, especially if you could catch it, but I would be very careful with it. I wouldn't hold on hope after a couple days if it doesn't move. If it breaks back down on Monday or Tuesday, I'd get the fuck out of it. If it falls below 7, there's another big put wall there, and it can stay under 7 for some time. So be very careful with it, but it does look a little compelling for this week. And I think that's it for those. I don't have time to go over the older stuff. I mean, I can tell you right now, DVN's pretty cheap, but dependent on a turnaround in nat gas prices. Otherwise, you're just buying it for the dividend. Oxy's fine if oil prices move back up. Seasonally, as we move into early late spring, that'll see some price improvement. Otherwise, flat for some time. They've been picking up a few. They recently picked up a new acquisition in the Permian Basin to expand a little bit of their interest there, but a very, very slow growth. Both of those, DVN and Oxy. I wouldn't expect any big moves out of them. But they are both very cheap right now due to oil prices being low. UGI is like 3 weeks old, and it's like a 5 to 10 year hold. So you might be jumping the gun on worrying about it. I think it's still very much within the buy range, and I don't think my thesis on it has changed in the last 3 weeks. Happy Labor Day, JC. Can you go talk about more about how to sell SPX credit spreads for income? Like what DTE? There's no specific strategy there. You have to develop one. That's why you paper trade. Like choose a DTE, test it, figure out when the best time to cut or roll is. Yeah, you can make a lot of money on bear credit spreads. Last week I lost all those gains. That's fair. But yeah, I mean that's something you're gonna have to develop a strategy, right? You figure out your max drawdown, you figure out how much yield you can make, your total allocation, and then you do it. And you see if it works, and then if it doesn't, you tweak it. This is how you create strategies and build up alpha for your portfolio. But I mean, like you're asking me that question, but I can tell you right now, there's a million different ways to sell BCS. You can sell them in the money, you can sell them out of the money, you can sell them for 1 day or for 30 days, right? Give me 1 second, guys. Sorry. Quick on cat. Okay, I could do cat before I jump into the mag 7, but I do need to get into the mag 7. I only got about 20 minutes left before we start going into macro and stuff. Okay, so Caterpillar doesn't look like it's got a bad setup here. Descending wedge. More of a descending channel, I guess. Will it break up? That's a good question. The thing I like about Caterpillar is infrastructure is still going to be a big spend over the next couple of years. There's still a lot of bullish interest in it. Let me look at the options chain though after Friday, because frankly Friday morning didn't look too great, but obviously some interest came in after Friday morning. I would say that actually kind of looks even worse than it did Friday night. If there were calls on Cat and they didn't hang out on the chain, I would say that you could probably just straddle here and then cut after a breakout or breakdown if you really want to play it. I think you have pretty good range. You've got like 290, 250 to the upside. And you've got what, 275 to the downside. So if you went with like an at the money straddle at like 285, and then if it breaks up, you cut the loser and set your stop at risk. If it breaks down, you cut the loser, set your stop at risk, right? So I think pretty easy to play that, without having to like really pick a direction. I will say, be careful holding Cat overnight. But other than that, probably a decent opportunity to straddle there. All right, let me hop into the Mag 7. First up, we got Apple. Obviously, Apple was one of the biggest beneficiaries of the run last week after being driven down into the dirt recently due to their withdrawn forward guidance. Obviously, none of that guidance has come back. Their sales expectations are still quite low. Their revenue expectations are trimmed. But they're releasing a $5,000 headset that literally no one wants to buy, so everyone's really hype on that. They did get some upgrades for no apparent reason besides just their Apple. And that's about all that happened over the last week as far as their fundamentals go. After close on Friday, their delta slipped back to negative, after experiencing 2 days of upside. Gamma still positive on it, so it can still be a little bit jumpy or choppy. Charm fell off, but not entirely negative, and total call interest fell. There's a big spike in delta neutral, with those calls coming off of the chain. We now have delta neutral at around 180. And Gamma Max, however, though, which Apple never tests, is all the way up at like 213. I would say this doesn't tell us a whole lot. Apple's not generally reliant on its options chain, but I will say that its options chain is weak, and Apple tends to fluctuate between periods where the options chain is very strong and the options chain is very weak. During periods where the options chain is weak, its price action tends to be a little bit more erratic and there's a little bit more potential for downside, but I would probably try to identify a resistance here, which there doesn't appear to be one anywhere near the money. Maybe that's also a good opportunity for a straddle, actually. Just simply because it could, with that positive gamma, it could continue up. It could see that like 195, 200 test. I think there's definitely enough calls on the chain for it to happen. But a breakdown could be really rapid. There's a lot of gaps to the downside to fill, and they're recent too. So I think both of those are possible. that one you may just want to avoid. But if you're interested in taking a straddle or a strangle, that might be an opportunity for one as well. Netflix, I think, is, or I'm sorry, not Netflix. Amazon is next. All right, so Amazon kind of butting up against resistance here. We did get a big breakdown in call interest. What we're going to see commonly across, I'll just say it now, across most of the Mag 7 is we're going to see a lot of Delta falling off. Now, whether new Delta is going to come in and support that or not, no idea. That'll be determined Monday. But as of Friday close, all of them are going to look really bearish from an option standpoint, and this will probably save me a lot of time instead of going through all 7 of them. January 19th is one of the largest, that Jan leap expiration is one of the largest, if not the largest, single equity expirations, right? Everyone buys their leaps there. And so when that expiry passes, you generally see shitloads of call interest, put interest, everything fall off across all individual equities. And that's what's notable about Beyond and Upstart is they're seeing the opposite effect, right? They're seeing those big short positions fall off, and those big vol short positions fall off. But yeah, this, I would say that none of these are going to look particularly bullish from an options point of view. And then that coming back, I mean, like, just for example, Apple lost almost 9 billion in Delta. Amazon dropped also about 9 billion. I'll just go to the next one. Hold on. Let's see what CRM looks like. CRM dropped about 2 billion. Yeah, so I mean, it just Delta falling off of everything. Also, a lot of what drove the run Friday too, right, is all of those out of the money leaps as they went in the money. You picked up those charm flows into the end of the day that drove prices and stocks higher. All of that's expired now after this OPEX expiration. And so largely, I would say we could probably revisit these throughout the week and see how they look. But right now, they're all going to look just a little bit bearish. If you really want to like move on some of the Mag 7 before next week, maybe like a inverse butterfly or something like that. But those generally tend to not be very profitable. So I would say that Mag 7's probably pretty good to stay away from for a couple days until the indexes have determined a direction. Or until we start to see, either supportive interest or negative interest come in one way or the other, right? All of them will present that same opportunity to just straddle, which could be a way to get in early if you want to. But obviously, a straddle is going to require a little more capital allocation than something directional. Exactly, Bibbs. So if there's any specific one people want me to cover, I can go over it, but they all look the same. So yeah, feel free to ask, but I would say yeah, they all look pretty similar. I just went through all of them, and they're all just not that interesting. All of them see a big jump in delta neutral. All of them have less calls. All of them have less delta. All of them still have positive gamma. Crowd. So yeah, crowd was definitely one of the ones that saw a big dump. Let me check something out here. Oh, that's the wrong. Is that the right one? There we go. So let's see. Crowd saw, yep, it saw DEX fall from 11 to 7 million or billion. We saw Charm fall off from 65 to 13. Delta Neutral moved up $13. We talked about Charm earlier in the week. Delta Neutral was really low. Since that point, Delta Neutral's moved up almost $20. So getting quite close to the money. Looks like calls fell off. Quite a lot of calls fell off. So yeah, well, same deal as the rest. I don't think I have any options data on SMCI. I might, but I'll have to check. Don't have it there. Okay, I do. So that picked up Delta and positive Charm into the end of last week. Delta Neutral moved down a little bit there. That looks bullish. That looks like it's gonna keep maybe being bullish. Let me take a look at the chart here too. So that might start to form a topping pattern. I think let me see where max 3, yes, it's already way above gamma max. I'd be careful playing more upside, but it very well could have some. How's the liquidity here? Very bad. So not a lot of liquidity here. Yeah, that might continue to squeeze out. So good chance that it keeps going. I don't think it's gonna go to $5,000. That would 10x. Seems, don't you think that seems a 12x? That's a little excessive. Beef. That's $423. Are you talking about SPX? SPX is like 400 basis points away from 5K. So probably not. That would be a very big week if that were the case. And I don't really see the positioning for that. We did more and less. Rarely. And when that was also a short squeeze. There's nothing to squeeze here. So kind of a bit different, right? Like there's no sold call positions to squeeze out. There's no puts to squeeze out. Most of the puts that there were to squeezed out on Thursday. So there's really just not a lot of liquidity. I mean, they can keep buying 0 DTEs, but that generally just sets up for larger mean reversions when they find sellers on futures. Without any liquidity to support the position, just jamming 0 DTEs is really limited in its effectiveness. I've mastered the forbidden art of making pancakes. I don't think anybody, I mean, unless you're personally forbidden for making pancakes, Carl, I don't think that the art is that sacred. I'm just trying to be honest with you. All right, I'm gonna see what the nerds are up to. Are you guys done talking about putting things in your butts? Okay, I'll unmute you now. So,
We were muted.
yeah, nice try.
How you doing, bud?
I'm doing all right. I have not slept in a while, but I'm okay with that.
All right. Well, just
My buddy had a
like
birthday party,
roll.
and I drank too much whiskey, so you're gonna get what you get today.
That's fair. I will say that you're only inferring that too much whiskey is a real thing because you have responsibilities and children. But I would like the audience to know that that's not real. There's no qualitative data that shows that there is such a thing as too much whiskey.
Well,
There is,
Sorry.
but it's when you find
Shh.
out that's the rest.
is this talking, what about like the liver enzymes to break down the alcohol running out? Would that be like the point at which you've had too much?
Well, if you drink more whiskey after that point, then you fall asleep. So
Yeah, it's self limits.
Yeah.
Or you black out and keep drinking and then die.
you have to drink all if you wanna reach the limit, you have to drink all the alcohol at once.
Yeah.
Yeah, if you go slow and steady, it's really hard to hit gamma max.
You're okay. With the drink tables, did you guys ever, your parents ever have like a drink tray with like all the alcohols on it, and the housewife would just sit around and drink it all day?
No.
I've seen that. I had a friend of mine in high school whose mom was like that. She was just like home all the time and always drunk.
Yeah, that was my dad's mom.
Ah,
She was
okay.
just sauced.
Nice.
Nice. I mean, it's like that maybe that was like peak humanity.
When we were always drunk and smoking cigarettes in restaurants.
Yeah. Well, I
Yeah.
don't know.
Yeah.
Maybe, yeah.
Yeah.
I mean, it was the
think so.
financial piece, that's for sure.
Imagine when your doctor would like imagine there was a time in the US when your doctor would be like, you know what you need? More camels.
Imagine there was a time where your doctor was like, "All right, I'm going to prescribe you 2 spoonfuls of heroin a night, and in the morning, I want you to take a one small dose of cocaine."
It's called laudanum and it's classy. And yeah, I mean, what better breakfast than cocaine in bed?
That's true. Yeah. Well, you're supposed to follow up the cocaine with a few camels, right? That's
Yeah,
the
yeah,
dosage.
of course.
Smooths it out.
Exactly.
Otherwise, you get too much done, right? Nobody wants a busybody.
Exactly. Yeah. Well,
Yeah.
that's how you become hysteric, right? As a
Yeah,
housewife,
yeah,
when you get too much stuff done and you lose your mind.
yep. And then
Speaking of
prescribe you a vibrating device.
speaking
Oh
of
yeah.
drinking too much, I don't know that I've talked about this before on stream, but I've definitely talked about it in chat before.
This isn't a
I
this
think
isn't an
I
AA.
think
I just want to interrupt you. This isn't an AA meeting. So if you want to share something, fine. But
I would say I think I figured out how to create a drink that allows you to be drunk all the time and never have a hangover
is it just
if you
one
stop.
shot of alcohol with a bunch of seltzer water?
No,
Okay.
no, no. There are medications involved.
Oh.
God.
Yeah.
Is it just taking GHB and getting weird?
No.
Okay.
Maybe one day I'll share it. It's too valuable though.
You
But
know what the
it's
Italians do to do that? They just put water in the wine and they drink it all day. Or they drink Chianti, which never gets you drunk. Like sake. Hot
I can
sake
hear
will
about
never get you actually drunk. Like you can just keep drinking it and drinking it and drinking it, and then by the time you leave the restaurant, you're like, wow, I'm sweaty and sober.
And poorer.
Yeah, and poorer.
God, sake. Yeah, it's weird like that, right? But that's why I like what's it called, like soju?
Okay, yeah, soju's the Korean one. Soju will fuck you up, and not
Yeah, well,
not like in the good, it'll get you drunk way, and the like, you'll have the worst hangover of your life because it's got so much sugar.
yeah, oh yeah, in moderation.
Cold
No, maybe one,
sake can fuck you up.
yeah, like some what's that called, nagori?
Yeah, but the hot sake, like, so much alcohol is already evaporating from the steam, right? And then it
Like
has
ice
barely
water.
any alcohol in it to begin with. So by the time it cools off, you've barely drank anything.
Huh.
Yeah, it's just like pretend drinking.
See, I wonder if the hot alcohol is taken up faster too. So maybe I should just start drinking hot beer.
Ew.
Ugh.
Ugh. Like freshly baked bread.
Exactly.
Freshly baked bread soda.
Exactly. Mm.
I'm gonna go ahead and not do that.
I'm gonna microwave my beer today.
Have we lost enough people already, or do we need to?
Dude, we're talking about Coke and booze in front of degenerates. We've picked up a bunch of viewers.
We can talk about my pool. Something happened to it.
Oh, did it blow up? Did something freeze?
No, something froze. The backfill. It gets me every year.
Fuck. That's another $150.
Well, I learned my lesson. If you close it all up, it'll just break the valves. But you leave it open, it just breaks the membrane. The membrane's only like $30. So
Oh, okay. Well, that's not bad.
Your tithing to the pool gods has gone down a bit.
You have like a salt pool, right?
I do.
Doesn't that?
It's
I mean, I understand that the salt is just turned into chlorine, but doesn't the salt like reduce the freezing point of the water?
yeah,
Okay.
it does. Like my
Alright.
pool hardly froze. It got down at one point. It was probably the coldest it's ever been here since I've lived here. It got down to about 17 degrees Fahrenheit, and there was a little bit of ice in my spa, but the pool didn't ice at all. There's just so much heat stored in it.
For you Europeans, 17 degrees Fahrenheit means fuck you.
Yeah, just go to Google and say C or F to C.
Anything below 20.
I will say this might get a few people out of here. I will say, and this is coming from somebody who works and designs and engineers primarily in Celsius and almost exclusively in standard units, meters, etc. But I will say, for the purpose of gauging environmental temperature, like relative to the human body, Fahrenheit is 100% superior because it has more resolution.
That's how it
Like
feels.
20 C versus 20.5 C, you can notice that, but it like sounds like basically the same number, but it's like 70 degrees versus 73 or 74.
We should just
Which
measure
is,
everything in Kelvin.
well, that's the same problem. It's just C with an offset.
No, we should measure everything in electron volts.
Rankin's what we should be using,
Ooh.
which is the Kelvin equivalent for Fahrenheit.
See, I just want to be able to say
Of course
that
that's a
the
thing.
temperature outside dropped by 50 million electron volts and have people freak out.
Oh yeah, we can measure it in EV.
Yeah, it's perfect.
We should measure sun energy in joules. Like if you go outside today, your skin will receive X number of joules per second.
Ooh.
Yeah.
Yeah, well, that's what we do. It's watts. Does anybody know off the top of your head, what the average heat flux is from the sun in watts per meter squared?
Pi.
No, not even close.
Damn it. What about what about BTUs for that? Can I do it in BTUs?
No, because that's a unit of energy, not a unit of power.
I thought BTUs were a unit of power.
Nope.
What?
BTUs per hour.
Oh God.
Yeah, it's all pretty awful.
That's like measuring like a display brightness. Like you do it in like candles or in like nits is what they're
Yeah,
called.
candelas, nits, yeah, all that stuff. Yeah.
Uh,
Ooh, we've had to have lost some people. I'm not looking at the stream.
Nope, even more. We've picked up, yeah, from our trough. We're up like 10 viewers.
oh God.
I don't know what else we could talk about that's more boring. How do we get people
Wait,
out of here?
how's your shrimp off going? Have you gotten the shrimp installed in your mini estuary yet?
No. I was gonna go out to Long Island this weekend because of the freezing temperatures and see how much damage it's done to the pool. But then I remembered it's full of seawater, and it was only like 20 degrees out, so I was like, "Fuck that! I'll just stay home."
Ugh.
I mean, right?
You should just like install a camera or something. It seems like that would be easier.
I have a Ring camera, but it's just on the door.
Yeah, you need to get.
That's
Go
to
to
keep.
Costco.
That's to keep the what are the people that try to live in your house?
Transients?
Oh, the sovereign citizens.
Yeah, it's just to try to keep them out. But I've never seen one. Although I will say that the security guy that like drives around the complex hangs out on my porch a lot, which is weird, I suppose.
Is it a nice porch?
It's okay. Yeah, it's got like
It's probably because no one's gonna bother him.
there's like a little like awning and a bench.
Tell me just a little bit more so that somebody in the chat can go on Google Streets and find it.
Good luck. I think it looks like most of the other houses in the neighborhood. But yeah, he just fucking hangs out there.
That's kind of cool.
Like I don't care. He's a nice guy. He's like in his like late 60s, but just hangs out there most of the day.
Most of the day. Okay, that's a little weird.
Most of the days that's a little excessive, yeah.
But maybe he knows that your house is empty and
he does.
protecting
Yeah,
it.
yeah, he does know.
So yeah, he's just protecting it.
How's your renovation going to turn it into the OnlyFans Moulin Rouge?
I haven't done anything.
Oh,
Yeah.
disappointed in you.
I've pissed off a few contractors because they'll arrange meetings with me. I'll forget the meeting is ever going to happen. And then by the time I remember, which is usually when they call me and they're like, "Hey, I'm here." I'm like, "Oh, well, I'm still in Manhattan, so I'll be there in 3 hours." They don't like that. Shockingly.
Yeah, well, get wrecked. They do that to everyone else.
Yeah. So I figure it's some way I'm fighting back against a system that I'm not participating in.
Yeah. Well, I mean, do you think that they tend not to be the most introspective folks?
Yeah, squatters. That's the word I was looking for. Fucking squatters.
Yeah, but like the sovereign citizen people are like Nazi squatters.
I've never met a sovereign citizen.
I haven't either. I've heard
what is that? Like you just like deny your social contract with the US? Is that what it is?
Right. Basically, but you deny like you're being held to like I think it's like even the Constitution that you have a right to
That's ballsy.
create your own like sovereign bubble, which is usually probably I think almost always inside of somebody else's property.
Do people think that that's do people think that that's like has legitimate legal merit? because it
I
doesn't.
mean, most of the people I think are crazy. Like I said, it's
Oh,
people who
okay.
are like squatting in other people's homes and convincing themselves that they probably have, mania and all this other stuff going on.
Wait,
Yeah, I've heard him call
I
afraid
can call
inhabitants.
the ring? How do I do? I want to say hi to him when he's hanging out on my porch.
Oh yeah, you can download the Ring app and just you can connect them and then you can pop into it.
Oh,
That's like the whole point of the Ring.
fuck. This changes
Like
everything.
Have
you
that
thought it
shit
was
on
just a
all the time.
doorbell? You thought it was just like a $200
I'm
doorbell?
not gonna say anything to him, but every time he's hanging out on my porch, I'm gonna like choose a playlist
There we go.
and just
Oh
and
my
just and just
gosh.
set the mood, you know.
Just play Barney's "I Love You" like a psyop.
Okay, we have actually lost a few people now, so I think we're good.
Okay. All
Nice.
right.
How about my prediction, huh?
Yeah, it was really far off. Me and JFresh actually both beat you this week because you were still 400 fucking basis points out of the money.
He got the spirit of the move though.
Well, yeah, I mean, he was just really angry that we were both too close to his original prediction. And so he went in the opposite direction, which worked out. But unfortunately, yeah, still last place as far as week close.
I basically predicted it like a full-on market-wide gamma squeeze.
But there was
What a
nothing
week,
there
man.
was nothing to squeeze up there. I didn't understand why
Yeah,
you went so high. Like you could have just gone to Gamma Max and you would have looked like a genius.
No, that's the thing
yeah,
is
but it's for the lulls.
rocket.
We're not trying to look like geniuses
Oh,
here.
also, JFresh, me and Dork are onto your like statistical medium that you're trying to pull off with your flat predictions every week. You need to make a real prediction, okay? None of this, oh, we're gonna go up and down and up and down and up and down bullshit. That's not valid. And I don't think me and Dork are gonna accept those anymore. Your end
Yeah.
of week price has to either be above or below the beginning of the week price, or in the middle of the week it has to move above or below the middle.
Okay.
All right.
I'll give it my best shot this week. I'll try to give you a honest to God prediction that will be of course wrong.
Is it going to be chopped between 4,800 and 4,840?
No.
Who's in charge of deleting comments? People delete their own comments?
But yeah, speaking of Friday and just straight up, that was a crazy day of call buying, huh?
Yeah, it was. It was a
That
crazy
was
like
wild.
half day of call buying. But
Yeah,
it
they just kept coming in.
got wild. After we broke that all-time high, man, people just did not stop buying. They didn't stop buying 0 DTs even after the price stopped going up. They just kept buying them and buying them and buying them, and future sellers got all the liquidity that they could ever want to exit their positions.
Yeah. Although, yeah, I was not expecting that at the end of the week there. I mean, I was expecting volatility because, all delta becomes gamma.
Yeah, I thought Friday maybe we had like room to 48.20 to the upside. Kind of near that all-time high, but I didn't think we were going to get there because honestly in the morning positioning was really weak. Like when we started to move down midday, it looked like the out of the money shit was collapsing, and it actually did a little bit as we moved towards that like that one test of like 47.99 we got, and then it just fucking exploded. And I think some of that's like that underlying charm. There's so much charm in everything but the indexes, right? Like I actually wrote down because I wanted to kind of see how it would play out, but I wrote down like the biggest charm exposures across like some of the bigger names like the Mag 7 and stuff. And Nvidia was an interesting one. Nvidia had like it had like 801 million in charm.
Yeah, there's I think a lot of the single stock names did more on Friday than anything else. I mean, when those things are moving, you've got 7 stocks or 28% of the S&P.
30.
When those things, it's close to 30. It's just under.
Is it?
A lot of people count Goog and Google's market cap together, like they double it, but it's total for both.
Yeah.
So anyway, it doesn't matter. 28, 30, same difference. So if those 7 stocks are going up like 3%, that's 1% on the S&P just from those 7 stocks, right? So yeah, that was I think that was more of what was going on there. And then the SPX was just kind of getting pulled around, and the hedging commenced, and it just was kind of crazy. What's really interesting though, the reason that the charm was so large on those single name stocks is because the concentration of the options were so concentrated all on this January expiration.
Yeah.
I actually just posted this before we got on. So I posted my usual option stuff on Twitter. Never going to call it X. And I added a chart, which is what I call the Fabulous 15, which is the Meme 7, a bunch of mega cap AI darlings like Adobe and AMD, and then Costco for some reason. And those 15 were the largest outliers, mega cap or market cap weighted outliers from 2023, like by a long shot. And if you look at the number of contracts that expired on Friday for those 15 names, it's kind of frightening. So like all of this year, basically, it hovered around something like 40 million contracts total for all of them. And, obviously that number goes way up. After an OPEX, a big OPEX, like a quarterly OPEX or something like that, obviously the number drops a lot because there's a lot of concentration there. And then it starts creeping up as people put on more positions, and you get to the next one and it drops. And so what I'm saying is that even if you factor in the fact that those drops are occurring, the amount that dropped off was like scary.
So actually,
we lost like 30% from the baseline.
Jesus.
So it'll be interesting to see, obviously people so what that might be telling me, I think, is that I think people are happy with the performance that they've seen, and they're scaling out.
Yeah.
We'll see in the next couple weeks how positioning comes back in, but a lot of contracts dropped off.
I'm kind of interested to see the effect of all of that like supportive charm falling off. And then also I guess we should talk about this a little. How is this going to affect that vol correlation and the dispersion trade? Because a lot of the support in the dispersion trade was coming from those Jan contracts. Like, are we just going to see a massive reversal in like long vol on those 15? Well, those 15 stocks went across the whole S&P, right?
Yeah, I think it's a little harder to say because, obviously if a lot of those contracts that dropped off, if those were associated with the dispersion trade, then yeah, that could be a big deal. But if you look on the index side, there's not really like an equivalent dropping off of contracts there. I mean, we lost some contracts, but it's still within like the normal range, after an OPEC. So we haven't like dropped off the baseline number. So that would have to mean that whoever is in the dispersion trade is just legging out of part of it and not all of it. So I don't know.
Because like here's a fun one. Go look at like dealer adjusted delta and like bullish, like the bot, like the bot call delta on Nvidia, right, for Friday's expiration.
Oh, actually, you know what? I will say this. You know what else has been dropping off? So not SPX, but QQQ.
Yeah,
That's been scaling down big. So if the dispersion trade is between QQQ and those big names, which could make sense, then yeah, there could be evidence there that people are getting out of that trade.
I mean, I think QQQ, like dealer vol exposure, is the lowest it's been in
Yeah, it's
in
like
the last since, well, I mean, it's like crazy since like Jan of
it collapsed.
2023. Yeah.
Oh yeah, I mean, yeah, I hadn't put these
Like,
dots together before, but but yeah, if you look at the fact that QQQ vol exposure has collapsed like scary rapidly in the last week, and all of these contracts for these big names, most of which are in the QQQ, except I don't think Costco is. Maybe it is. I don't know.
I don't think Costco is in QQQ.
But the other 14 are. If those two trades are connected, then yeah, that's people getting out of dispersion. Hard and quick. Vic, while you're looking at, I don't know what you're looking at, but y'all should talk about that big spike from Friday. I don't really think there's much to talk about there. I know that there was some chatter about some guy on Wall Street Bets or something that uses that as a signal of a top or something like that.
Costco
but
is
there's
in
only
QQQ.
Is it?
Yeah, it's 2.4% of it.
Okay. Wow. I guess yeah. That makes sense then. Yeah. So you've got these 15 stocks that are massive outliers to the rest of the indexes. And you have QQQ Vega exposure collapsing. Yeah, it could be people just letting their, basically it could simply be that they're just letting their positions expire and they have no interest in putting on new ones. But obviously they could build new ones over time. We'll just have to see how it evolves.
Yeah.
But yeah, that big spike from Friday. I mean, even that guy that looks up, uses it as a signal. There's only like 4 of them. So it's not statistically relevant. It could all be a coincidence. Also, you have to think about what VIX is, right? VIX is just a measurement, and it's a measurement based off of the bid ask that is affected by the bid asks of the SPX. So when I see like this big spike in VIX that just goes away, probably what that is somebody either like slapped a bid or ask on a really illiquid contract and just blew out the spread momentarily, and then they just didn't the market makers just don't update it until somebody else comes along and wants to do something there. I mean that's the most likely explanation.
Yeah, I kind of explained this a little bit earlier, but I could go more into depth with it. So the SPX checks its auction every 15 seconds, right? And that's on the spread of at the money and out of the money contracts on SPX between, it's greater than, so it's 24 to 35 days to expiry. Because it's greater than 23, a little bit less than 36. And basically, if there is a spread or multiple spreads in that window of options they're looking at, right? You have like your at the money option, and then they're looking at like a few of these as well, like out of the money, right? And then a few really far out of the money. And they're kind of averaging all of these together. If the spread on like a set of these options is really blown out, like say these, right? Like maybe we move through that all-time high and a bunch of people closed out sold calls, right? Or bought to close a bunch of sold calls. And that window sees it, you're gonna see VIX gap up.
Yeah.
And that's and don't get me wrong, that does generally mean that a big volatility sensitive position has somehow fundamentally moved, probably.
Yeah.
But
Yeah. It's measuring a real thing that happened, but is it statistically relevant?
maybe not.
I
I mean,
don't know.
these also happen around like Fed meetings, right?
Yeah.
They have a little more liquidity in the gap up when at like a Fed meeting or something like that, but it's not unusual to see VIX move, like 100 basis points over one candle. Surprising always, but definitely something that's capable of doing. I mean, if you guys were trading more actively back in like 2020, 2021, there were tons of instances of seeing VIX, just drop like 2% or jump 3%. It happened pretty frequently, and VIX was higher back then, so those new moves were notionally even larger. So I don't think there's any statistical relevance to it. But something big and vol definitely changed with this expiration. So, the unpinning of vol that we started to see happen on Wednesday after the VIX expiration, I think we're still seeing vol unpin. And one of the things I'm actually most bearish on right now is that, even though we're trading almost like 60 BPS higher than our prior high, VIX is like 6% higher than it was at that prior high. So we actually have a lot of like spot up VIX up right now. And that might actually be statistically relevant.
Yeah, and then there's
I will
this
say
might be
that's
a
the
good
first
time.
time we've seen that since 2022, right? Where we hit a higher high on higher VIX.
Yeah, if you look at like I should probably drop this in the chat. I haven't updated it for people in a long time.
Are we
I
going to
looked
look
at
at
it this
fixed?
morning.
Do you want to look at fixed stripe vol?
No. Ugh. I mean, fixed strike vol is, given a certain set of assumptions, it's a quick way to check for changes, but it's not. You got to be careful with that, especially when the market's moving so much the way that it is, right? I mean, like, if the market moves, when we were like gapping up every night, you can't use a fixed strike vol. I mean, the vol curve is changing, is moving too much.
I agree.
But anyway,
Which chart? Where did you put it?
which the SPIC 6? I haven't. I have to. Let me just.
You're doing it.
Yeah, it just shows that we're moving back to a longer term baseline. It's less blown out. Remember, it just like got blown out and just stayed there. And then I stopped updating it because it just stopped doing anything. It just like stayed in like the 2 standard deviations away from average and just sat there. It's slowly coming back. So let's see, SPX. But while that's going, this is probably a good time since you mentioned spot up, fall up. If you look at the VIX on Friday, it was like way down. And people are, and it seems to it always goes down on Friday, and everybody talks about like this Friday effect. And the reason for that is the weekend, right? So you have to wait. The volatility is based on 30 trading days ish roughly, right? And so you have 2 days where you're not going to be trading. Now there's not zero risk, right? So there's some risk that gets baked in depending on what's going on in the world and what people are feeling. But in general, to compensate for that, 2 day window, you have to essentially you have to drop the VIX to keep prices similar, right? Otherwise, you're going to have this big jump in prices from Friday to Monday that could always be arbitrage, and it would be a mess. And that drop, it kind of changes depending on various things, but in general, you can just think, okay, you can look at the ratio of like the square root of 30 days to the square root of 28 days, and it's something like 3 point something percent. Just between 2 or 3%. So if the VIX drops like 2 to 3% on a Friday, that just means the VIX didn't change.
I'm long VIX again this weekend.
I know. Well, you see, I mean, there seems to be a real underpricing of risk over the weekend. So, and it could be that because so many people don't understand the VIX that they are just shorting it every Friday, but then they would be I don't know. I don't know. I don't know how people are making money off of that. I haven't
Futures.
dug too deeply.
Well, I know how, yeah. So, Girk, if you want to pop open that fun little correlation chart I have, I can kind of touch on that a bit.
I love getting into the correlation charts. Do you want me to?
Because I mean,
we're here on the weekly, and that's now at negative 42.38.
Yeah. So this correlation chart, right? I wanted to touch on it a bit. Obviously, I can't like go into too much like detail because one, it's complex, and two, screw you, JP Morgan. But the way that this works, on a very high level, is it compares correlation between, VIX and VIX futures through through their stability, let's just say. Okay, so like if the, like the, and honestly, it's just another way to sort of get a very fine tooth comb and measure out how stable these stocks are and then correlate that, right? So if VIX is going crazy and VIX futures aren't really doing much, then this correlation would go negative, right? That's kind of the whole idea behind it. And so that's kind of what we're seeing is that one of them is being very varied in its behavior while the other is not. And the correlation going down below negative 40 implies that there is some negative linear correlation between the two, right? And this measure sort of, it really should be, high, right? So if it's greater than 80%, it's strongly positively correlated, which means they're behaving about the same. If it's below 80%, they're strongly negatively correlated, which means they're behaving the exact opposite, right? And we're in a weak negative correlation area right now, which you could say is not quite statistically significant, but even being around 0% means that VIX futures and VIX are just kind of doing their own thing, right? And to get into a weak negative correlation regime means that there is some sort of inverse relationship between them. And with what we're measuring, it does imply that there is a fairly decent piece of evidence that VIX futures convexity shorting is happening, and it's happening very strongly. Where the forward return on VIX futures is getting suppressed, right? Especially in that VIX window. So it's interesting, and I enjoy seeing that happen because it's never happened before, and it goes to show that we are, there's volatility shorting, but it's happening in the futures market primarily.
Yeah, and if we I'm not going to go into too much detail, but we can change that look back period on these. And if you look at a shorter look back period, that statistical relevance is much higher, negative 40%. or negative 54%. Sorry.
Yeah, that's that's moderately weakly negatively correlated.
Yeah.
And yeah, that's over the rolling period, right? Like so it tells you it's a pretty short window, right? Like it's obviously not the entire thing.
I mean, it's 28 weeks. that's
Yeah,
that's a pretty extensive period.
and on weekly candles too, which are not, we're not talking like on the 1 minute or the 1 hour. We're talking over the entire week, right? They've had this sort of relationship develop, and it does tell you that there, if we were to mean revert back to a normal regime, right? That there will be some sort of behavioral shift either in VIX futures or in VIX, right? Or both, right? To where they snap back together and start moving around in the same way again, on the weekly scale. And that snapback could be violent. I mean, so it's kind of like the soft landing, hard landing sort of situation. It could be violent, or it could be incredibly boring, right? It could be the most boring thing you've ever seen. It could also mean that VIX is going to go up. So, I mean, that's the way I see it happening. Is the VIX futures convexity sort of snaps back into a more normal curvature, but it's all speculation on how that's going to happen and why it's happening. But with VIX convexity shorting as a means to produce yield, I think that it's going to be to the upside, kind of like what happened to the bond market. That could happen to the VIX futures market too.
Yeah.
So I'm looking at the QQQ based on our discussion.
It's so
and
sexy.
The leverage since AI mania, the leverage went from like 10 on daily traded volume up to now like 50, just in a straight line all year.
Jesus.
But the number of contracts, so obviously leverage is going up, but the number of contracts has been very slowly bleeding off since September on both puts and calls. So it's kind of interesting. Yeah, I don't really see a lot of that on the S&P tickers.
Hmm.
And unfortunately, we don't have Nasdaq. Nasdaq's a less liquid options chain, but its nominal value is so high that there's been some interesting stuff that others have noted on it.
So you're telling me that the leverage on QQQ looks like the NVIDIA chart?
Well, NVIDIA didn't go up in a straight line. It kind of gapped up, but yeah, I mean, it's there. I'm sure there's something going on there.
God, it's the animal spirits, my friend. Animal spirits.
Oh yeah, there's people like people are getting frothy. What's this?
This is just NQ. It's so ridiculous.
Oh my God.
It's just like almost a parabolic upside move. So, well, definitely since like November, right? It's more than parabolic. It's just kind of straight up. I wonder when this will all end.
I mean,
we've got we've got sorry, I just got an email from the party I was at with a list of all the items that were left behind. We drank too much whiskey.
You hang out with weird people.
Well, yeah.
I always considered if I throw a party and people leave things behind, those are called presents.
All right. I don't even remember what I was going to say. That threw me off so much. I should check to see if I left anything.
So from a TA standpoint, I mean, futures could head as high as 5,800 if we look at the parallel channel from the GFC to now, the upside test is right around 5,800 in like 6 or 8 months. And then we could come tumbling down in some sort of correction.
I'm not gonna
I mean,
I'm not gonna trust your TA on that.
okay,
Oh.
so I understand, I understand that valuations are not that important when it comes to the movements of the stock market. However, you're talking about price to earnings ratios that are like greater than the dot-com bubble.
That's correct. It's going to be it's purely inflation, right, and fiscal spending.
The issue with it that I have with that though is, I definitely agree that inflation is, going to be pushing upwards, but as long as the rates stay up, right, earnings are just kind of garbage. I mean, quarter four 23, fiscal year 23 quarter four earnings.
It's like
We're
7,000.
already like 10% of companies reporting for the SPX, and the earnings are now projected to be minus 1.7%. And if you recall, like in the first half of 2023, we were all laughing at the prediction for quarter four of 23 just magically being 12% year over year. And here we are trying to get it positive. Now, of course, all of the fiscal year 24s are all just magically 12. So they just kind of pushed it. They're clearly just pushing it out until it happens. But I mean, if those earnings aren't good, we could definitely enter into a period of stagflation significant enough that people are just not going to want to own these overvalued risky stocks when they can get pretty big returns from less risky assets. There's other ways to benefit from inflation besides the stock market. I don't know. I don't see it. I don't see it. What did you say? 5,800 this year? I don't see it.
No, I don't either. Maybe like 52. Well, if this continues out. Are you measuring it on the daily? Is that why? Because like the upside test here is like 6,000 on the log trend.
Jay Fresh is using fib retracement. No, actually, you want to know? Because I said I think I said on Thursday that the market was going to just go up. The reason that I did that was because if you look at the shape that was forming on the daily, it just would look so weird if it went down. I was like, it has to go up. I've never seen.
Holy shit! The VIX correlation thing looks bearish as fuck.
Well, it's because it is.
Okay. That's like above the zero line on the like the nominal. That's really bearish, right? Divergence is nuts. And that's just kept up since November? Okay. Do you want me to show people that?
I mean, if you want to, I don't see the harm in looking at bearish shit. I mean, we really are in a crazy vol shorting regime. As much as it seems like, and the reason why is because the economy is looking like it's headed for a soft landing.
Does does it?
Yeah, we're in a Goldilocks period, right? If you ignore the trajectory and you just look at the numbers statically today, everything looks great, right? Obviously, we're moving towards something different, right? But right now, everything looks awesome.
So do you want to go over this for the people that have forgotten?
Oh yeah. So yeah, I haven't shown this in a while. Basically, I'm looking at the correlation between the SPX and the VIX, and using some of our options data that we've gathered and developed. I try to subtract out longer term like delta driven trends and just look at like volatility. And if you notice, I think yeah, blue is on the top, blue is the SPX, orange is the VIX, and these are all normalized and adjusted to just look at volatility. And you can kind of see in like 2022 when, everybody, volatility was nuts and the market was nuts. They pretty much just tracked each other as people were, people would go long and then people would go short, and it just kind of oscillated back and forth. And then you can kind of see right in like well, really, I mean, the primary place was like right after the bank failures was when it looked really noticeable. You can kind of see that the VIX and the SPX started breaking down, and then it just kept getting worse and worse and worse. And what that's telling me is that people are shorting the VIX basically. And so if you look at the spread between those two things, which is the plot below, you just take the difference between those two curves. Obviously, you've got these two, each dotted line is one sigma move. So you've got a couple points where you get these, 2 sigma events. But for the most part, it kind of oscillated, and especially in 2022, it oscillated, around, 0 to 1 positive 1 sigma. And then once we got into this year, like kind of at the beginning, right when all this shorting started, all the vol shorting started happening, you could see it starts to trend down. And then obviously after July, we had a nice little pop when, we started going down. But then they shorted it right back down. And here we are popping up. And so what's currently going on now is we're like trending up back to the mean. What that's kind of showing us is like how much gas is left in the tank to blow off top, or whatever you want to call it, right? Just basically blowing out sold calls. And that's so like when Girk says there's nothing to squeeze out up here, right? Like on Friday when everyone was buying calls and pumping, we squeeze out a little bit. There's a little bit of price up, fall up on the intraday. When we got near the 4,800 was a level that was noticeable, but there's not much to squeeze out. And it's kind of shown in this chart that we're kind of getting back to, a normal range. It can still go a little higher, which would mean that the SPX will continue to go up to meet the VIX, usually is what that means. But then once we get there, there's no more gas, and then somebody's going to have to own the market up there if they want to keep it up there. And I just don't see this market as having durable support at these levels. So
yeah, I think this is a good setup for a big breakdown. Generally these mean reversions tend to pick up opposing momentum. Instead of just stagnating, it's pretty rare that you get a period of like stagnation between those two assets, especially with all of the bond risk, right? Because obviously, like a huge amount of flows have gone into bonds, especially over the last 3 months, and they're going to want that convexity hedge when it becomes available. And so, kind of in a very similar fashion to what we see when me and Dork are tracking that forward yield on volatility. When that hits that positive level, it shifts the demand structure in the market from, your yield is in short vol. Now there's a positive yield in long vol. right? And then you get everybody piling into long volatility. And generally, when people pile into long volatility, it's not slow and stable like short vol. It's all at once and violent.
And then you have all those people that are short vol that have to get out, and they become buyers too.
Because
But
part of that is because the more people that pile into volatility, the higher that forward yield goes.
yeah,
Whereas, the more people that pile into short vol, the lower the returns go. And so the dynamics are kind of inversed there.
yeah. Yeah, I mean, I still think that we're definitely primed for a big chaotic move down.
Yeah.
Obviously,
Yes.
something has to kickstart it because there's a lot of momentum into the short vol trade. But something like, sorry, my kids are screaming. Something like you know 25 to 30% of the Fantastic 15 contracts dropping off, and QQQs, Vega all dropping off. That could be something, right? We'll see. I mean, we'll have to see. Rates, I think, are still going to be super important for a variety of reasons. I think higher rates are they're obviously bad for bonds, right? But they're also bad for stocks because of the way people are using both bonds and leverage based on those rates. So if the bonds drop, then leverage will have to either rise to meet the reduced, reduced collateral, which is what's kind of been going on, or it just has to pull back, right?
Yeah.
There's also other effects like hedging effects and things from rising interest rates that are also not bullish for the market. So I'm definitely very in tune to rates, and I think they're going to go up this week in a substantial way because they kind of have been. I think that trend's going to continue because Janet Yellen is selling almost $400 billion worth of treasuries this week.
Jesus
And with
Christ.
significant, I think it's up. I think it's over.
Is
No,
she
I
just
think
trying
it's
to
just
kill? Is she just trying to kill the RRP before the Fed meeting? Like that's
I mean, she's
almost
got
that's what's left. How much fucking money is left in that thing? It's got to be almost. It's got to be getting
I think
close
it's
to
like
empty,
500 or 600 still. But yeah, so it's like on the order of like 60 billion in 2, 5, and 7 years
Six hundred and
notes. So
twenty-five billion left. How much are they selling on the 5 and the 7?
they're all like around 60 billion. I think they're big. They're big boys.
Ouch.
Pull it up.
If those print a tail, it's gonna hurt.
They're gonna print a
Yeah,
tail.
60 billion on the
I
2
know.
years, 61 on the 5, and then 41 on the 7.
The tails might not
So
be that fat though, because yields are still way up, right? From where we were, like, even even a week ago, yields are way up. But from our low on December 27th, yields have
yeah,
moved up pretty substantially. So those tails shouldn't be as fat.
but she's also selling.
But the
You know,
7-year might be. The 5, I
yeah,
feel like
because the
the 5
RRP
could
is going to
be
be
either way.
the RRP is not going to be as accommodating to the longer duration, right? Because that's a big risk to that money market that has liquidity risk.
Yeah.
So we could see some fat tails. Who knows? The key is looking at the rate of supply versus the rate of credit expansion. And I think right now, the government is spending faster than credit is expanding, which I think is going to naturally have to lead to higher rates.
Yeah. I feel like we're starting to see some of the signals of a resurgence in supply shock. Um it's slow, but it's very obvious in the port city, like the Empire State Manufacturing Index, right? Um big drop in sales and forward orders. Huge, actually. You saw how low that came in. Not so much, I think, in the Philly one yet, but a little bit. And I think we'll see that in those regional manufacturing reports first. But I think we saw a little bit of that pressure in PPI this last month, and I'm starting to see, like, as international PPI comes in, like Germany and Japan, which is actually a little less affected by the closure in the Suez Canal than Europe and America are. But there's some hints there that we're starting to see producer prices climb up again, and those have been largely deflationary, right? Those have been kind of leading the way on price stability, or a slight return to price stability. And if we see a spike in the next 2 to 3 months from all of this, like, Houthi attacks on the shipping lanes, it's going to be really, really bad for the central bank plans to cut rates. And the ECB has been a lot more hawkish than the Fed. I think they've been a little bit more forthright. You know, several of the governors now have come out and said, we're not cutting rates this year. There's no way. And they actually have recessions. Germany's undoubtedly in a full-blown recession. I mean, no one's calling it that, but their GDP for all of 2023 was negative 0.3%, right? And they're the third largest economy in the world. Great Britain is also undoubtedly in a recession. And yeah, their unemployment starting to rise pretty rapidly. We see consumer demand dropping everywhere outside of the United States. Like, our consumer sentiment numbers look great, but China's the second largest consumer of our products, and China's consumer sentiments, or consumer sales, like retail sales numbers, are cliff diving, as they kind of reach the tail end of their financial crisis, and their unemployment starting to peak. And we know China's not very honest about their unemployment reports, but, you know, and it was flat at like 5% for a while, right? Like, suspiciously long period of time. But even they bumped it up to 5.1, right? Japan's seeing a dive in consumer demand. And remember, when we're talking about this, all of these companies are multinationals, right? Like, all of these big QQQ corporations, these like Nvidia, Apple, huge amounts of their sales come from outside of the US. And if those economies aren't buying, they can't maintain those earnings, right? I mean, they could see drawdowns in margin of, 20 to 50%, depending on which company we're talking about. And I think the more consumer focused, the more at risk. So yeah, I think all of that's kind of starting to bubble up, and I don't see a route to the Fed cutting rates unless there's a recession. So barring a recession this year, right? Which, I find it hard to believe that we'd get an official recession in an election year. I don't think the Fed has any room to cut rates. That we have no price stability, and I think we're about to find out exactly why. Also, the May CPI report, we're going to see those healthcare costs return, and according to like Humana and UNH, or UN, is it UNH? I always forget the name of the fucking company. It's like the big Dow health guy.
I don't remember.
Hold on. UNG? Why doesn't this have time? God damn it. It's UNH. Okay, I thought I was right. Yeah, UNH and Humana both came out and said that their pricing was like significantly higher this year. And so once we start shedding off that back half of 2021 where healthcare costs were going down, we start to move into a regime where that becomes additive again. Also, oil's starting to get pressured a bit. Very cold winter. We can see nat gas supplies drying up in Europe. Even bigger problem, the nat gas lane to European reserves is directly through the Suez Canal, right? So if Europe starts to run low on reserves, the shipping time is going to be like 37 days to get from like Madagascar to Rotterdam instead of 16. So it could be much harder to fill those reserves in a timely manner.
All bullish, and
Yeah,
we should be buying the dip.
super bullish. Some people mentioned that on the Discord last Friday, and that, like, a lot of what we say is bearish, right? And a lot of the macro view is not positive, but the macro is just not positive. I mean, and that doesn't mean that stocks can't go up, right?
Earnings also aren't positive.
Yeah, well, we could get into that too if you want.
No,
But
well,
I mean, we could sit here and lie to you guys and cover like the things that bullish economists cover, but those aren't, like, when you remove all of the things that drive inflation from your chart of inflation, of course it's going to look great. But if you look at the broad picture, it doesn't look good. And I think that the pickle jar is at an advantage knowing that the macro conditions are not stable, that they're not healthy, and despite that, stocks go up. Because eventually there will be an equilibrium found between those two things. And when that happens, maybe you guys won't be full port 401k into like tech growth, right? Maybe you'll have 30% in, like AAA corporate bonds or treasuries, and you might just do a little bit better than the bulls who are full port into, like, Nvidia as they attempt to commit treason for the fourth time.
yeah. Did you see the there's pictures of our boy Jensen celebrating Chinese New Year in like a weird vest and doing dancing. He's like dancing on stage or something. It was really
Shit.
bizarre.
He's so
Yeah.
tech
He's just like,
CEOs
I
are such a
love
weird group
China.
of people.
He's basically saying like, I will get you your chips, calm your tits, we'll figure it out.
So yeah, I kind of agree with Kirk. I mean, like a smart, like, so the stock market always climbs the wall of worry, right?
Yeah.
And all we're doing is presenting the wall of worry to you guys. I mean, it's something that's totally, reasonable to do, and what we should all kind of do when we analyze our own risks, right? If you don't analyze your risk and you're just blindly bullish, you're being a bad investor, right? When you analyze the risks that are presented to the things that you're invested in, you should carefully consider them and the impact on future valuations. And if you're invested in REITs, I have something that shows some risk in that I put in the voice chat. I posted this on Twitter, but it basically says if you're an average person and you're looking to buy an average house right now, you should expect to spend about 62% of your monthly compensation on a house.
That sounds about right. Oh yeah. I think I shared that before.
Yeah, so that's
not sustainable, by the way.
Exactly. Yeah. So I mean, if you're in a REIT, I mean, your bull thesis at this point has to mean that like rates are going to go back down to, like, mortgage rates are going to go back down to like sub 4.5%, right? And without any impact to the housing market.
This is how much of the total average income that a average home loan would cost. So right now, roughly
insane.
around 62%.
That's insane. there's me at the bottom, right at the bottom of 2020, like 35.
You know,
Fuck you,
I'm not even on this chart. I don't have a mortgage.
Yeah, so I mean, I know.
No, that's and this is another thing too. I want to talk about housing, and because you mentioned the CPI with things removed, inflation looks great. Everybody's just like, well, right now everybody's removing housing because it's one of the big last things, right? Oil's been suppressed. Healthcare has been, you've just mentioned all the reasons why healthcare has been underrepresented in the CPI.
Yeah.
So housing's like the big one, and everyone's basically saying if you remove housing, or if you look at CPI or PCE over the last 6 months annualized, like inflation solved, and so all these, they go through more and more hoops to try to make the data look convincing. Whereas you're not going to be able to get a good picture of inflation on anything less than a yearly timeline. It's just not the reality of these measurements.
You're also not going to get a good look at inflation if you're not looking at all of the factors that drive inflation.
Yeah. So with the housing, they keep saying like, oh, we know it's lagged. We know it's lagged. We know it's lagged. But they've been saying that it's supposed to come down for a long time. And I think one of the reasons why it's just simply not is because, one of the features of housing, even if you have a mortgage and you've locked it in at a low rate and everything's great, insurance is going way up on housing, and taxes are going up as well, and that's factored into the cost of housing in these numbers. And so, I mean, my own housing costs, they've gone up at least 3 to 5% a year, just from those things, right? Not even like appreciation of houses, which are also still going up. So
my rent
Yeah.
can't be raised for the next 3 years. So
Yeah, I know you've told us that they've that's why you get all this work done in your apartment. They just keep sending people up to do stuff to try to get you to move.
I mean, they really want, they've offered to buy me out of my lease, just not at a rate that I'm willing to accept. Yeah, they don't want me here. They fucked up really bad. But that's why you do your due diligence before you write a lease.
So I think the big thing you guys are missing here, though, is if you look at a number that is the value 2, inflation is at 2% and everything's great. Come on, it's that easy, right? If you just look at the number 2, inflation is at 2%.
I mean, but like, I can't, in good conscience, tell people that, because it's not accurate, right? Like I see the case bulls are making, but it's wrong.
It's weak.
It's, well, not only is it extremely weak, it's just based on falsified information, right? You can't ignore the broader economy. You can't ignore healthcare. You definitely can't ignore the fact that healthcare is going to go right back up, right? Like, why is no one talking about that? Like, everyone was like, oh my God, healthcare went down. This is super awesome. Inflation solved. But nobody's talking about the fact that value changes 6 months later and goes right back up again, and it goes up at 3x the prior rate, right? It's all very short-sighted. It's ignorant, and I mean, I feel like yes, we could spend all weekend talking the bull case and talking over their talking points and covering what the bulls think. But if it's baseless, then I mean, until somebody can come to me with a legitimate, and I've been asking this since 2022, show me a real bull case. The most bullish case I see is right now, as far as stock markets are concerned, is that we get the Fed's soft landing. We get a market crash, full crash, 30-50%, and then a rapid recovery on the back of quantitative easing. Outside of that, and I don't see a path forward for the Fed to cut rates unless that actually happens. Outside of that, we're looking at like a much longer period of continued higher for longer monetary policy, drier and drier bank liquidity, and what is going to inevitably be a tighter and tighter lending environment over the next 5 to 10 years.
Yeah, I mean, everybody likes. We're kind of at a point now where people have been so desensitized to so many things like quantitative easing and the amount of debt that our government has, and I think it's going to be a real challenge going forward for the Fed to allow the market to grow without inflation also being a huge issue, and so higher rates are not bullish in the long term on the back of all of this spending, because more and more of our spending is just going to generating money and not generating productivity. And so it's going to be rough. Like right now everything's great because the government's pumping in these massive deficits during a one of the tightest labor markets we've ever had. um, those things are connected. But at the end of the day, right, we're printing quarterly nominal GDP numbers like 9%, and you think inflation's at 3. I that seems highly
Unlikely.
suspect to me, and it's only going to get worse, right? It can't go it's unlikely to go the other way. Because more of the money will go towards creating capital, and there's only so much capital creation that you can do to drive growth. At some point people have to like build things and do things. And so there's a limit to that, right? And when the money starts growing faster than that limit, that you have issues. I think the way to solve it is just to, everybody wants to live here, just let in like 5 to 10% of our population every year. Just go nuts with it.
Yeah.
That would be the easiest way for me to get out of this and actually get some like supercharged growth to keep up with all this money that we're printing. But we don't seem to be headed in that direction as a country.
The banks are strong and resilient, Girk. I mean, if you guys haven't, I suspect most of you have, but if you have not, I suggest highly that you read the thread that I wrote up on Twitter. I put it over on the Reddit as well.
Listen to us. We've all said the word Twitter today. We're such good skills.
Mathematically, yeah, we are. Mathematically, the banks are fucked. And the probability of how fucked they are is what was the R value on that? It was like 97. So, or 0.97.
Correlation is not causation, but having a correlation like that doesn't hurt.
Yeah. And the leverage ratio was even higher. It was like 998. So as the 10-year climbs, and that's really all you need to watch, as the 10-year climbs, and it's now, I wrote that the 10-year was at 3.9%. It's now at 4.1. Its current trajectory is to the upside. As the 10-year climbs, more and more of those fair value assets become at risk. The market turned around sharply on the last test of the 10-year at 5%, but had it crossed over, we were looking at $4.6 trillion in banking losses. And that is not something that the Fed nor the banks can sustain right now. And so the Fed is, in my mind, doing everything they can to try to prevent that scenario from occurring. But at the same time, they have to address inflation. And threading that needle, I think, has been quite hard for them. So far, they've been successful, but they can only be successful in that for so much longer. We've got another potential government shutdown now on March 8th, which is before we decide whether or not the BTFP will continue. I will tell you that if the government shuts down spending, there will be no BTFP facility after March 13th. And that means no more liquidity backstop for these banks. That is going to drive fear in the bond market, or fear in the markets. And we're probably going to see yields continue to increase throughout the rest of this year. Now, as long as we don't hit 5%, only 1.26 trillion in assets are at risk right now, above 4%. But if that keeps climbing, and remember, if any of those banks fail at any time with their, depositor to their depositor their depositor to like net capital ratios are at like 50%, so they have like 50% of their depositors are uninsured. um if that is realized in anything, right, that's going to skyrocket rates higher. That's going to put more assets at risk, right? Those assets get marked to market, and once you start getting that flow of mark to market assets, there's nothing that really can hinder it or stop it. Like that's truly a contagion event. And so, I mean, yeah, the Fed's done everything they can, but time's kind of running out on that side. And I don't see yields substantially lower than they were even like 6 months ago,
Yeah.
It's all just super duper fascinating, isn't it?
It's kind of
Like,
interesting. Yeah.
I mean, there's just like there's still like the risks that were present in 2022 haven't gone away. That's the most interesting part. Like we're okay, so inflation, yeah, we're not at fucking 8% inflation, right? So, okay. But
I mean, we might
now
be.
we have all this crazy shit happening with the shipping lanes because of the Houthi rebels being douchebags, right? And I remember us at some point on the Sunday stream talking about how this like in 2023 about how this drop in inflation, right? It could be there could be three outcomes, right? Flat, down, and up, right? And the sensitivity of inflation to both down and up is it's not sensitive until it inflects like crazy, right? And all it really takes for inflation to get back up to say like 3.5, 4% is something like what's happening right now in with shipping costs.
Shipping can drive inflation far higher than 4% and much faster than you think.
If it's protracted, it certainly can, and that's why the U.S. is starting to get a little pissed off about what's happening and starting to actually take military action.
I mean, it's protracted already at this point, right? We've got over 35 days of redirected shipping lines at the cost of like $100 billion a day. That's gonna be realized by somebody. Someone's gonna foot that bill, and let me tell you, it's probably the U.S. consumer. It hasn't.
Yeah, I was gonna say it's
hit
probably
home yet,
me.
but yeah, it hasn't hit home yet. But it's coming. It's inevitable, right?
Yeah, that's and but it's just so interesting, right? And you know how the market has reacted. Go fuck yourself. We're going up, baby. All-time highs. We are back. We are back in business, boys. And they're trying to make up. The thing is it's not just all-time highs. They're trying to make up for lost time.
Is it interesting that B of A private clients saw the first outflow in treasury holdings this week since 2022?
That is interesting.
If people are selling bonds, they're expecting yields to go much higher.
Yeah, I sold all my bonds. I'm not touching them.
I sold my bonds too. I wish.
Those are
I actually I almost nailed the top. I was gonna say I wish I sold them a little like a little later, but no, I don't.
yeah. I timed it pretty well too. I just didn't have as much of that sweet duration that you had, just because I had limited options in what I can.
I mean, I had some most of my duration exposure was in TLT because I was long TLT. but I had some amount of like 10, 20, 30. But once it got around like 5%, I was like, I need to get a little bit of this. But mostly I was in 2-year, 1-year. So those did see some improvements, right? But not nearly as drastic as the 10, 20, and 30. But I guarantee next time rates hit 5%, you're going to be a lot more interested in those 10, 20, and 30-year bonds.
I mean, honestly, like right
Yeah.
now, especially like with the risk premium in the market, like and forward earnings being as lame as they are, like it's just it's so tempting to just go into rolling 3-month positions, right? And just let those things yield you something and, have like an equity exposure that is more logical,
I mean, it's
right?
just better than money markets, right?
It is. And
Yeah.
but like I just mean like if you're trying to get like just actual straight price improvement from your index holdings.
Yeah.
Right. I mean, and you're let's just say you're running a traditional 60/40, right? With the growth as extreme as it is, right? You can reduce your overall exposure to your index funds and get the same performance you would have on an average year, and then taking the rest and reduced your risk like crazy. Like
Yeah.
I just it's so painfully obvious, and I'm kind of
I feel like
I don't know.
most
It's
people
just so
are
weird.
doing that. I think most of the flows are still going into money markets, right? Like obviously that's not as efficient as choosing treasuries, and it probably carries a little bit more risk than just buying treasuries direct, but um I mean,
Get that straight liquidity.
we're still not really seeing like outflows from money markets yet. Despite all the advantage of buying, S&P at the bottom, people still seem to be pretty happy getting their 5%.
I
Um,
don't think I think the day we see outflows from money markets is going to be an incredibly bearish day.
Probably, yeah.
It's going to be so bearish because that means there's a liquidity issue and people are worried about being able to get their money out of the money markets in time, right? And like,
Yeah, I made that argument a while back. Yeah, you want the money market, like bullish is money markets flat to up, slightly up, like not too fast up and definitely not down.
Yeah,
yeah,
if
like
we see
so,
all that quote unquote money on the sidelines start moving, I'd be
Oh
afraid.
God.
Yeah.
yeah, like it's so like
Money's always on the sidelines. You cannot store money in the market. It's not how money works.
It's a
so
bank,
yeah.
and it's our bank, Jay Fresh.
The whole idea behind
Be
money
your
market,
own bank.
it's like the whole idea behind money market funds isn't that like there's like risk to your equity, right? Like if you have a bunch of or your capital, right? So if you have a bunch of money in money markets, and let's say we get a fucking Lehman moment, right? And the money markets can't price their NAV, and you're not really going to lose a ton of money from that. But what's going to happen is you're not going to be able to get your money out of the money markets in time to take advantage of whatever's happening elsewhere, right? And that's
Yeah.
the biggest thing is the opportunity risk is massive during those things. And that's why, an outflow from money markets means that people are anticipating an opportunity risk from having their money in the money market. They're probably going to be deploying it, but they could just be stuffing it under their mattress if it's actually that scary.
Yeah. Nope, you're right. I agree. But all of the bearish things aside, when I tell you guys the market is gonna fucking bounce, take some action to prepare yourself for a market bounce. And in my defense, I will say last Thursday and Friday, I indicated that markets were going to go not only go up but continue up. I did not expect a bearish close to the week. Do something to prepare yourself for that. Get out ahead of that move, whether you're reticent to buy calls or not. The index and the positioning on the index are not the macro environment.
Also, a 60/40 port doesn't mean 60% options, 40% stocks.
Tell that to NVIDIA investors.
It means a 64, the traditional 60/40 port is 60% sold puts and 40% bought calls.
Do we
I thought
want
it was
to
60% NVIDIA, 40% Google.
discuss the diamond top?
I don't know. I don't like TA. You
I
can
don't either.
talk about it all you want. I don't
want
know.
to.
I just looked at that. I just looked at that little guy, and it's just like it doesn't. I've never seen a shape like this break down before. It would just look too weird. It has to go up.
It's the thing is like it's when we talk like the momentum trade, right? It's the mother of all momentum trades right now. Like it's not going to go down unless something really shitty and like we have to get slapped in the face with something insanely bearish.
Momentum's actually really bad. You're wrong. On the upside, volume's just been declining.
It all depends on your time frame.
I mean, daily, weekly.
On the weekly time frame, we got a solid amount of momentum. If you look at the ETFs, they're looking decent on the upside.
What, like QQQ SPY?
Yeah,
But those tend to trade higher volumes into reversals, right? Because they're under leveraged.
yeah, and their volumes are not high. Their volumes are average.
They're up recently. I mean,
Yeah, I think their volumes
On the weekly, they're not.
Oh, yeah.
Yeah.
Well, on the daily, they are.
I'm talking about the secular bull market we've been in since the beginning of 2023. We had a pullback and it was great, and we all had a good time.
Why are you trying to use a 30-year secular bull to determine near-term TA?
No, I mean I'm not. I'm using a 1 year secular bull market right now to determine the momentum of the market. Right, like we have decent momentum still to continue up. Right, and diamond tops, whatever the fuck you want to talk about, apple bottom jeans, boots with the fur. Who gives a shit? Right. The market's going up and people are going to trade that momentum, and it's going to be a self-fulfilling prophecy. And that's just how the market works in general until, like I said, we get smacked in the face with something shitty. Next week, we got a fuck ton of bond issuance going on. That could do it. But that's mostly a liquidity thing, right? That's not, the tails could
Well, we
shake
also
on.
have a liquidity thing coming in on the back of billions and charm dropping off of single tickers.
But that could be replaced. That's something that can be replaced, and we saw it happen before. This wasn't the first time. It happened in December.
That's true. Well, in December it was indexes, not single tickers.
It's going to be really.
Different.
I mean, unless we get just like the mother of all inflows that the market has never seen before tomorrow, it's going to be really hard to replace all of the contracts that were doing a lot of all that work on the Fantastic 15, for example. I mean, the indices like the SPX and the SPXW chains. I mean, that's a pretty rolling position, and that has transitioned smoothly through OPEX. I don't foresee anything on that side, providing some sort of imbalance tomorrow morning, but looking at those 15 stocks of just the number of contracts that have fallen off, it's some amount of momentum I think will be lost there, and it'll be interesting to see how that transmits to the broader market.
Yeah, I just don't think it's going to shift sentiment, honestly.
I mean, we didn't shift sentiment from July to October either.
Nope, we certainly didn't.
So,
yeah, it's a stupid world, and stupid people are running the markets like fucking idiots, and they're going to keep pushing shit up, and we might see a pullback. Massive,
honestly, that's the best bull case, I think, is that we're talking about all this stuff, and the people who are pumping money into the market and driving where the market goes don't care or don't fully understand it all. So yeah, it's sometimes it pays to not overanalyze and be too logical, right? Because you want to match what the average investor might do, not what you would do with.
Yeah, it also just remember that while that might pay, it doesn't pay when you're buying $50 out of the money 0 DTE calls into 7% volatility crush. Okay. Yeah, that's not the like. Get a debit spread to the upside, give it some time, because vol does crush on the upside moves, and that's better exposure to have some theta.
Well, just to have offset on your theta risk, right? Like that's huge. Like, especially if you're buying it open, that offset's going to be major. But,
Which
yeah,
number in the 15 is GME? It's not part of this. But they are pumping the market to pay GME holders right now.
Yes.
Can we talk shit about Bitcoin some more now that Gap's here?
No, can we talk about Bitcoin some more now that Gap's here? It's
Yeah,
down,
about it.
but I think
Yeah, there's not much to say. It's just been
Gap
it's gone
expected
straight
that.
down
It's
since
gonna
the
keep going
ETF
down.
opened.
Gap's probably got some sort of, fancy support somewhere in here. I mean,
Well, where's the CZ line? I want to find out where
there's
that
so many
is.
ETFs now, right? Bitcoin's
When's the halving? That's the next thing to hype. What time? It's this year, right?
the halvings are bearish though, right? Like once they happen, they're super bearish for a while.
Yeah, I don't know the exact cycle, but people have been posting them. People are getting excited about the halving.
April 2024.
Boy.
Yeah, aren't they like really bullish into them and then out of them that's just bearish as fuck because nobody's mining extra Bitcoin. They're mining half the amount of Bitcoin they were before. All the miners are going to go under.
At some point, yeah. I mean, at some point, I think the miners will just go under, right? I mean, the only way to compensate the miners is for the price to rocket. And so everyone's just like, okay, well, they're having it, and so the price is going to rocket. It's like, well, the other option is that the market just ceases to be a market, and it all just collapses.
Yeah, that and every major financial institution in the world is just going to start shorting the fuck out of Bitcoin now.
But don't worry, Bitcoin is, you'll still have your Bitcoin, so you still have the intrinsic value of the coins. You just won't have a market to trade them, a traditional one. But you can still use the coins for their, intended purpose outside of the markets.
Yeah,
short term into halving is immediately bearish, flat through halving, and then bullish afterwards. Okay, yeah, that sounds about right.
Also,
or at least historic. Yeah, also just historic.
How many halvings have there been? Like 10.
Historically, it's been like that, but I feel like I remember the last one being kind of bearish afterwards.
I don't know.
3.
What are your guys' thoughts on Bitcoin being made by the CIA?
I don't think so.
I don't care. It doesn't do anything.
Who cares?
What?
It's a store of value, JFresh, whatever the fuck that means.
But it doesn't do anything. It's backed by nothing.
It stores your value in stuff. It's not a commodity. It's not a currency. It's a store of value.
You could make an argument for it being a commodity.
Well, the SEC has declared it not a commodity.
Oh, okay. I mean,
well, I don't know if the SEC has. They don't really touch on commodities, but the ETFs have written in their prospectus, prospecti, that is not a commodity, because if it was, it would be under the authority of the CFTC, and they don't want to be,
Well, plus, I mean, like, aren't commodities things you can do stuff with? Like, what am I putting Bitcoin in my manufacturing process?
Yeah.
Your butt?
But no, it's virtual. I guess my metaverse butt.
Yeah, you're sticking up your digital ass.
Love it. Yeah, it's not a commodity. It's literally nothing. I mean, it's a store of value because enough people believe that they're gonna have value. But like, I mean, and I told Gaff it's not gonna be legit until there's actual Bitcoin lending.
I don't think Gaff. I've talked to Gaff excessively on crypto, and I want to know. I want you to know he's largely trolling you, and he does not have the faith in crypto that your average crypto bro does. He's fully aware of the ramifications of the legal framework surrounding crypto and the incentivization for central governments to get rid of it, right? He just trades it to make money, which is fine, right?
Well, what legal framework?
Yeah, well, they're developing one, right? They're gonna. I mean, it's not no government is gonna give up their their fucking currency in order to, you know, uphold Bitcoin. It's just never going to happen.
Yeah, and
And
Dork, this
and you,
whole idea, of lending with these coins, that is also never going to happen.
I can't get you in the call, Gaff.
They're too vol like think about this. If you have a deflationary coin, first of all, nobody's gonna want to lend it. And if they do lend it, because it's deflationary, they're gonna have to pack all of that deflation into the rate, right? And then you tack on the volatility. Who's gonna want to buy a house with Bitcoin when the mortgage is like 25% APR? Like, who's gonna want to do that? And that's the whole point of fiat currency. Like, one of the points of fiat currency is that
Well, what you do is
the central bank can manipulate the currency to create stability, and then people can pull that stability out of the rates, and so everybody enjoys lower rates because it's stable. Now,
see,
obviously,
Jay
it's
Fresh,
not a stable system, and it's becoming unstable at this point. But that's the
what you
idea.
do, you buy a house with your Bitcoin loan, you open up a HELOC with a Bitcoin HELOC, right? And then you buy Safe Moon with it because that yields 1,000%, and then everything's good.
Gaff says it
Then
isn't the point of BTC. It is the point that BTC maxis want idiots to believe is the point. Yeah,
I'm not
BTC was
convinced by
just supposed to
anything.
be a proof of concept. And we're gonna see governments, like central governments, shift to digital currency, right? And their own coins, which will be the coins you're allowed to use. So, I mean, blockchain will have its effect, but it's not going to be through Bitcoin. Bitcoin's not going to be the thing that survives it all, right? It'll be the
Cardano.
something that's transactable at a rapid speed across multiple countries and across different markets, right?
That's Cardano, isn't it?
Don't fuck off.
Sorry, my bad.
Cardano's got some potential. Honestly, Solana is probably more attractive, like because it's more centralized, right? The more centralized, the better.
I'm gonna make a crypto, and it's just gonna have one coin, and it's gonna be mine. And my exchange is my laptop.
Okay, perfect.
I'm
Yeah,
just
do
gonna
it.
exchange it with myself.
Do it.
Kind of done that
If
with
you do it, I'll shill it.
kind
Well,
of
no
done
one's
that
gonna be
with
able to buy it.
Discord.
I
No,
mean,
nobody knows this, but I started a Discord like 8 months ago, and the only person in there is me.
I'm gonna
And I've
ban.
invited no one to it.
I'm gonna ban you right now.
What? From my own Discord?
Yeah. How do I get in there?
You can't.
I'm gonna time you out.
Yeah, and every once in a while, the picture for it is that old one I made where it had the cat with the bullhorns, and my kids come by and they're just like, "Oh, you have your own channel?" It's like, how many people are in there? I'm like, 0. Just one, just me.
do
It's
you
like, why
go
don't
in
you
there
invite?
and show Rocket Coin to yourself?
Yeah, I post stuff in there. No, I've not posted anything. It just says welcome. This is the beginning of this server, but I have it.
Wow, it's like a digital immense sense of loneliness, like the Abyss, where it's just an empty server with nothing on it. Well,
Predictions? No.
I guess we should do this, huh?
Yeah, let's get rid of these awful ones from last week. We're all wrong. We suck.
Dude, I killed it. All right, I nailed it.
J Fresh was closest with his half-assed attempt, and then I was in second, and you were in third because you targeted a price 400 bips out of the money.
It was genius, okay?
Well, I will give you this. Initially, at the beginning of the week, it was 520 bips out of the money.
I thought it was great. I enjoyed it. I had a good laugh while everyone was talking about how I was going to be right.
We are at the top of the technical trend here, which is kind of interesting. I'm gonna have to move our levels around a bit though to accommodate for the fact that we've broken the all-time high now. I will say that on the monthly time frame, we are now in a bullish technical area. So we've broken out of neutral into bullish. That's probably relevant. But anyway, who wants to start it off?
I can.
Okay.
Open at 48.25.
Well,
Close Monday at
oh,
48.35.
all right. So open at 48.25.
Yep.
All right. Close Monday.
Close that date. Yeah, 48.35.
Hold on. I gotta I gotta redo this. Piece of shit. Okay.
Don't worry. I'll try to avoid doing any sort of gaps or anything because those are hard. So yeah.
25, 35.
Yep. And then Tuesday, well, let's just open at 35 and we're gonna go down to 10.
48.10?
Yeah.
Okay.
And then on Wednesday, we're gonna go from 10 to 20. And then on Friday, we're gonna go down to 4,800.
Okay.
So just a big old bull flagish, bull pendant, whatever, bull flag.
Yeah, and I'm gonna make Girk extremely angry right now. So what I did was statistically after a green week, your average return is around -1% if your returns the prior week was around 2%. So that's what I'm aiming for right now.
All right.
Absolutely just bitched out and went the statistical route, and yeah.
Okay. J Fresh?
Yeah, I'm gonna keep this simpler, just so you can draw it. I'll just give the open for Monday and then just closes all the way. So open on Monday at 48.50.
Ooh. Okay.
Close at 48.55.
Okay.
Next close at 48.65.
48.65?
Yeah.
Okay.
Then 48.20. Is that Thursday?
Yeah, that'd be Thursday morning. Well, we're looking for Wednesday close right now.
Oh, Wednesday. When is she selling? The 7-year. Well, the 5 years on Wednesday. So we'll say flat on Wednesday.
Okay. All right, Thursday.
And then Thursday is the 7-year. Yeah, so then 48.20. And then Friday 47.70.
47.70.
Oh, looks like I missed a day. Well, you could just extend my line out further and make it really shallow.
Okay. Shit.
Just get a little scoochy, and that'll be fine.
So, just redraw yours. So you want it just like flat into Friday?
Well, you could just take that line and like literally horizontally just move it over to the end of Friday, and keep it at the same price. That's my closing price for the week.
Okay. So like that.
No, just the one
No,
line.
just the last one, just the last segment.
Like, I can't move
No,
that
not the first segment, the last segment.
Oh, I see.
Do what you just did, but except for the last one.
Yeah.
Like that.
Yeah, but 4,800, not 4,895. There we go.
It is at 4,800.
Thank you.
All right, so you know what? Fuck you guys. This is a blow off top. Let's go wild with this. Let's say 4,800 tomorrow. 4,750. Flat Wednesday. Hold on. I'm gonna go up on Wednesday a little. So I think we open high though. I do think that. Let's say 4,800 tomorrow. 4,750 Tuesday flat. Wednesday lower close, bounce back. Thursday.
Love it. Look at this. We're still all bearish. All of us are trending
Yeah,
down.
all of our end of the weeks are still bearish.
We need a bull. We need to bring in a bull. We need to find who's the
Here.
dumbest person in the
I'll
picture jar.
just
Let's
draw
get
the
a
bull
pipe in
case. The
every
bull.
week.
I know what the bull case is, right? I just don't want to draw it, but it's the blow off top, right? So we move up. Probably like 4,875 tomorrow. Auction Wednesday, we test 4,900. Rejected. Test 4,900 again. And then Friday close at like 4,850. This is, or I'll just.
Even your bull case is flat.
It's not. Well, on the week, yeah, it's flat, but that's right. Realized vol is still really low, so that makes sense. I think it'll take a few tests of. I mean, like for the bull case, I think it'll take a few tests. But this is where I would be if I was a bullish person. Bullish Gherk, and then bearish Gherk. Hold on, I'll color them. Bullish Gherk can be blue.
One of them has to be dork.
This is Dork. This is you. And this is my bearish outcome.
Yeah, green is Gurk, blue is Gork.
Yeah.
Yeah.
I mean, I'll tell you right now, I'm fucking hedging for this shit, right? But I would like to see this. I think they're both pretty equally possible because we don't know what's gonna happen with flows tomorrow.
Yeah, it's gonna be
positioning.
fun. It's gonna be fun to see what shakes out. I'm sure it'll just keep going up.
Oh,
forever.
Jesus, Gaff's holding his own like Bitcoin conference in the chat right now. We've got to get a chat room set up so we can bring guests in. That way we could just let Gaff run his mouth for like 20 minutes and we can all get like snacks or something.
Yeah, that'd be good.
His lawyer would have a field day with that.
I mean, he can talk crypto all he wants, right?
That's true, yeah.
And then we can have a crypto. He can do the crypto subsection. And he'd love it. He loves talking. He'll talk about crypto for fucking hours and hours and hours. All right.
I feel like he would just love to talk finance, and crypto is the closest thing he can talk finance about, and so he's just going to go nuts.
No, he actually hates equities.
I don't blame him.
I bet we could have a wonderful conversation about CNIS.
Probably.
Yeah.
You mean my sinus indicator?
He also likes to talk about regulation.
Ooh.
I will speak on equity regulation for days. He loves it.
I wouldn't mind listening to that because I'm.
You mean the lack thereof?
Oh, there's lots, right? Equity regulations. Why there's no MOAS. All right, that's enough of all of this. We've got our predictions in for the week. We're bull bearish.
Yep.
Bullishant.
Yeah, let's see how it runs. And thank you guys so much for coming on, as always. In the next couple months, we might be seeing the format of this Sunday stream change a little, or there might be a Saturday stream as well. So get ready for that shit.
Yeah, we'll see how it goes. We're just so incensed. We love listening to ourselves talk so much that we're gonna do more of it.
Yeah, we do.
It's
So it really is. I mean, I love hearing me and you guys. You guys, we all like to just hear each other,
Yeah.
and it's great.
This is the great financial circle jerk.
I already deal with hearing you 6 days a week. It's about to be 7.
Nobody's holding a gun to your head, dude.
All right. Thank you
All
guys for coming on. I'll see you guys later. We got some stuff to do tonight, so
Oh yeah.
I got
All right.
penciled in.
Yep. Thanks.
later.
Thanks for having
everybody.
me.
In a little bit.
Were there any questions that I missed out on that mean something to me that's not crypto? You want to go long weed, poopy pants? You know how I feel about weed. When Armageddon crash? Probably not tomorrow. maybe tomorrow. We'll see. There's a lot of supporting flows that fell off of underlying stock. I don't know. I could see, like, that's why I've got a bearish prediction, right? I could see indexes falling just because the supports float out on individual tickers. And if that's the case, then yeah, we might see a shift in the dispersion trade and a breakdown in single stock vol, which means index vol goes up, right? We are theoretically at the top of a break, like so this can kind of go two ways, right? Like from a technical standpoint, this is a blow off top, right? But it could blow off higher before failing, right? It could like test up here and then fail really hard. So it's hard to say which point we're at. Like, are we at the blow off top and then it fails, or is the blow off top a little higher? Right now, I don't see the positioning for the higher blow off top, but it's not out of the realm of possibility. We've already seen plenty of upside price action where there shouldn't have been any, so don't ever underestimate the power of buying hundreds of billions of dollars worth of zero DTEs over the course of a week. Yeah, generally higher yield stocks, like a lot of utilities especially, and materials carry a lot of debt. So they do have there's some dividend risk in those sectors with the dividends coming down. I would say it's important to choose somebody who's got a good payout ratio when choosing dividend stocks in those higher dividend sectors where you usually see those bigger yields. But as long as you're smart about it, most companies don't want to cut their dividends if they can avoid it. But yeah, there's some debt risk there, and refinancing risk. I would say that there's more refinancing risk this year and less dividend sensitive, less interest rate sensitive sectors actually, and they'll become then more interest rate sensitive. But we have a lot of like short duration corporate bonds that come up this year. And then those I think are going to be most immediately impacted, and that's a lot of like the S&P stuff. So how's the platform going? It's awesome you guys are building it. We're kind of just looking at it. I'll update people if things are happening that people need to know about. Right now, still a lot of work to get done. So what are you doing with our 129 4700 4600 debit spreads? Well, I hedged them a bit on Friday. I had a straddle, which I held almost to the top. That helped me hedge off about 40 of the 50 of that contract I have. I probably need to pick up a little bit more upside hedge to hedge off the rest. But if I don't see indexes falling into the first half of this week, I'm cutting them. I'm going to have to cut them and reposition elsewhere. And I'll probably reposition further out, like past end of month. I didn't cover Spirit. Why would I cover Spirit? I don't care about that. It's fucking, they're gonna like probably go bankrupt, right? If they don't, it'll run like crazy. People will scalp options on it. Most of them will get blown up, and then it'll get shorted back down again. And then a bunch of people will buy it, hold the bags through its delisting and dissolution, and then form a weird cult around the stock that no longer exists. Why does everyone keep asking about DVN? Is it because it's down? Or people just want to buy it because it's cheap? DVN's a little bit below my target buy range. It's the first time it's dropped below it in like, over a year. But it's got room, $5 of room to the next resistance. I consider most of this range to be a really good buying opportunity. I still like the stock. I haven't ever bought more of it, but that's because nat gas prices have stayed really, really shitty over the last year. If I think there's a turnaround in nat gas, then I'll leverage up my position in this. But for now, I mean, it pays 7% on the current cost, which is a phenomenal dividend return, and their free cash flows are great. Like I don't think their fucking dividends going anywhere anytime soon. They've got plenty of cash on hand, and they're spending a little bit extra money on expanding operations, but that's probably good into the future. I think they're cheap relatively, and if nat gas and oil go up, their price will also go up. Why does that sound familiar? You don't think another airline will try to pick them up? Maybe, but they could get blocked too, right? They won't let them fail. No way. Why not? Well, they're not that important of an airline. Somebody can buy them out in bankruptcy. I don't want to fucking own it through that shit, though. Right? How do you know when you're buying the bottom at that point? They have so much fucking debt, right? Like, when's it a good value? 50 cents a share? You don't? It's all part of the allure. There's so much chaos. There's so much risk in taking a position like that. You can just wait for Adam Aaron to tell you. Yeah, that's not something I'm interested in. I mean, if I see potential for like a squeeze or something like that, maybe I'd get some out of the money call options on it. But like, like that's all the exposure I would ever want. I don't want to buy it. I don't want to own it and fucking have the fat bags that it comes with. Too many ways the shareholder gets fucked in those scenarios. All right, guys. Thank you so much for tuning in. If you have any questions, I didn't get to them on the stream, feel free to reach out to me throughout the day. I should be around. I'll have Pickles Picks out maybe even a little bit early today. So that'll be cool for everyone to get some actual time to discuss them, which I know you don't usually, but, and then, yeah, that's about it. I'll see you guys tomorrow morning. Have a good night, everybody, and enjoy the rest of your weekend. Later.